let's continue. We are going to the next phase of the movement, the next phase of direction and the rest. Next phase of context, drawn liquidity and everything. We are going to the next phase. But before that, I want to show you what happened here. So this is the type 2 entry. Let's just say type 2 model. Remember when I say we'll have this from the manipulation, the confirmation, everything. You have a low because you already know it's going to buy. Then this, then it take you out, maybe come deep. Then you have something like this. Then it will come back here, either a break of structure or like this. It will come back to this place. So instead of now, as it takes you out, you will not rush in. You just put your entry here because it's a type 2 that is happening. Then that's all. So if you check here, what happened here? Let's just take this off. For instance, let's imagine that we already came down here, and we did what? We had this low. This was the first low we had. You get the point that there's a low here. We mark it out. Now, price was going well, price was going well, heading towards TP, and we mark it and, catch a good 4R. I used to target 4R from case of death. 4R. I always target 4R from case of death. I don't care. It's 4R all the way. So from here, that's a case of death. That's a continuation. So from here to that high, price took us out. Then do you know what you do? Once price take you out, you just, that low, that last low that price formed before it continue buying, just come back, mark it, put your entry there. You will see this particular move in Telegram, this move. They took me out at first, then I entered this. Just go to that Telegram. Search throughout, not Telegram, sorry, TikTok. Search throughout my TikTok. You see this particular Ethereum move. You see it, Ethereum. This is Ethereum. Yeah, you see this particular Ethereum move I caught. Took me out at first, and I did what? I did the same thing. So just put your entry and just target the 4R again. Don't go beyond that. 4R. That's it. Target the 4R again. Just put your entry there. And I told you this thing mostly happened at kiss of death. They'll just double manipulate you. That's why I put my type 2 entry. Type 2 type of entry. Sometimes it might be a break of structure. It will come back there and it will go. Sometimes it will not be a structure. You just pull up, and come and, So this is the type 2. This is how you use your type 2 entry. It's clear now. It's simple. It's just like this. You use your type 2 entry. And type 2 entry even give you more RR again in case. But we don't need it. You have to focus. But when you're already at your normal type 1 entry, you have already entered. You don't even need all these keys of death. But in case you miss your first entry, you came late and you want to enter keys of death, just know that keys of death can give you type 1 or type 2. In case it takes you out, you don't panic. After your type 1, in case it takes you out, don't panic. Just put your entry at that place. Don't fear. Don't think it wants to leave you. I bet you, as long as that setting is sure, I bet you to come back and mitigate you and give you your move. And again, risk management. Once it gets to this point, all these points are points of reversals, liquidity reversals. Once you reach this point, take most of your entries out, 2 of your positions out. If you are risking $200, if you are risking $500, 3 positions to risk to that $500, like it should always be 3 positions of a $500, 3 positions of a $1,000, 3 positions of a $200. So you are taking 2 positions out and you're letting the rest ride. Simple as that. So now let's continue to the main strategy. I hope I've elaborated it enough for you. This is how I catch my move. It's sweet. Nothing is more. I don't need any strategy. This is what I need in my life. You don't need anything. This is what you need. So I'll cancel everything. We'll delete everything. Then we'll go back to imagine after the buys. Let's see the other strategy I use. The other pattern I use. So this is the first one. We close above pattern. They close above type. Then we are looking for the wick above type or the wick below type. Now, the wick above is telling you that we have to reverse to the opposite direction, basically catching a CRT. So because it's a higher time frame, it confirms our move. Now, you can see we are bullish. Closing above, we are going bullish. Closing above. Then all of a sudden, there is now a wick above. So that wick above, and it closes as a wick, already tells you we are going the opposite direction on the daily. That's what it's telling you. We are going the opposite direction on the daily. And there has to be a support. You get the point, right? there has to be a support. The higher time frame has to support it. It's not every week above that you catch that will be bearish. It's not every week above that will be bearish. You get the point, right? But there have to be a frame. There have to be a frame. If you can see, this week above is happening at a liquidity point here. So there's a key level. It's not happening at a random place. But in case, there are points where in case, even though it's happening, it's wicking above. You must confirm it on a lower time frame. You get the point? You must confirm a lower time frame confirmation will help you, And in case they take you out, then no problem. In case they take you out, then no problem. You get the point, right? So that's it. So the week above is going to tell us that we are definitely going to pull back to where, and we are heading towards the daily. So let's continue. So in this model, you can see we failed to, this particular one, I already told you that we failed to close above. You get right? So mean we are going to either head towards this low and we are going to continue towards this place. You get the point, right? Because we are going to go bearish. It's even oversold. We are going to go bearish to this other low. So it's as simple as that. So what then are we now looking for? What then are we now waiting for? So it's simple. We closed here, we opened here. Now since we open, we are always looking for 1 a.m. because 1 a.m. is the opening of the candle. So we head down to 4 hour. What did we observe on the 4 hour? We observed that there was a close below on the 4 hour. You can see the close below around this level. I already marked it out. You get the point, right? So there was a close. If you can see this candle, that is after the manipulation, it's closed below. So it already gave us clearance earlier. There's already clearance earlier before time that, okay, we are going to sell. You get the point, right? We are going to sell. So even that sweep above already can give us move. This move, currently there is a good move happening on the 8 hour. But since I'm not on 8 hour, I can't quantify it. But I'm telling you what we can do with the daily. You get the point, right? So since there's a close below, it's already giving us, okay, an early opportunity, okay, that we are going to enter earlier. You get the point? There are some cases that you will not see any close below. You wait. But let's wait for the candle to close via we are learning. So since we're waiting for the candle to the close above, after the candle close, where did the candle close? Where the candle closed around this level and opened around this level. So since the candle closed and opened around this level, we can decide to mark it. We'll go down to 1 hour for our entry because daily 1 hour as entry, 4 hour 15 minutes as entry. This is where you see the sense of all the types of entry play out. You get the point, right? Okay, this was where it opened. Yeah, 1 a.m. This is when the new candle opened. So the total soup, this thing is confirmed. You get the point, right? Our manipulation is confirmed. So that's it. So what do we now do? What do we then do? We mark the low. This was the last low, right? Mark it as our entry, right? Then how do we now enter? We enter off of this place. Just stay with me. We target 4R because it's very close to the TP already. So we target 4R. 4RR. But in this case, in this scenario, we target 4R and price took us out. Where do your mind go to? Okay, your mind just go to, okay, it's type 2 entry that is about to happen. It might be a type 2A or a type 2B, it doesn't matter. All you know is type 2 entry that is about to happen because you are going to a drawn liquidity. The stop loss did not disqualify you. The stop loss just told you they don't want to move at that particular period. Don't mind you, this is a higher time frame. So don't allow lower time frame to deceive you. Just focus on the higher time frame. So price might be a lot slower, but it doesn't matter. It might affect your psychology because it's a lot slower. So after taking you out, what do you then do? Just kindly put your entry back at this place, at the place they take you out, and just put your, simple as that. And you can still target the 4R again. I already told you, target the 4R again. But in case the stretch is much, you can see there is a good stretch, there is a good distancing, there is a good space. You can target 5R. There's a good speed, but I'll advise target 4R. Just go back for your 4R because you are still coming. Me, I know what to do. So once you do, you see, it's a type 2 entry that happened. So I told you there is type 1 and type 2. And if you notice, even after the close below, type 1 entry happened here, put your this thing and straight to TP. That's all. I entered the move from here. I already knew it will happen. That close below on the 4 hour, I've confirmed anything you need. But I will mostly want you to wait for a candle to close. Once that candle close first, then you can now wait for your entry on the next opening candle. You get the point, right? So don't panic. TP or SL, even though it's reversing, just wait. You understand? So once it takes you out, you just put your entry back here. Once you put your entry back here, that's it, and you target the low. That's the type 2 entry for a sell, not a buy this time. So what is the type 2 entry for a sell? From the manipulation, we had the low. That's it. Then there was a break of structure. This one, there was a break of structure. Some, there will be no break of structure. You put your entry here. You get the point, right? Price will go. What the price will? Price came back and did what? Price came back and took us out. What would you now do? You put your entry at this level to mitigate and it will sell. So this is the type 2 entry. Very complicated, right? But it's the same thing for the buy. When you enter here, price will take you out. Instead of now doing what? Price taking you out around this level. Sorry, you put your entry here. I drew it wrong. It's so complicated that I'm even drawing it wrong. You have the manipulation. From the manipulation, you have this. Then break of structure. Price took us out. So taking us out here, what do we now do? We'll put our entry here. See, mitigate. And it does what? It sells. So it's as simple as that. So when price takes you out here, just put your entry back here. Now, there is a case what we call missed entry. In case you miss an entry, it just goes. Maybe it takes you out and you miss it and it goes, no problem, missed entry. You just wait for your model again. So this is what happened here. This is what happened here. This is everything that happened here. And straight to TP, right? Yeah. This is the take profit. This is it. So even with the loss, you still won. So let's go back to another example. Let's go and look for another example. And again, mind you, you know how to use your risk management. How do you use your risk management? You know what to do when you are doing risk management. You know what to do. So towards the weekly for this model. You get the point, right? I already told you I'm heading towards the weekly for this model. So we can do it on the daily and 4 hour because I would like you to do it on the daily and 4 hour too and enjoy it. If you are doing it on the daily with 4 hour, you will enjoy it. But there are sometimes you use weekly for this sort of model because anytime daily is not giving you a direction, we go for higher time frame. I don't go below. So when there is no clear drawn liquidity on a lower time frame with daily, there's no clear drawn on liquidity, then what am I doing? I'm going higher a time frame to look for what that higher time frame is doing because if daily is not giving us a draw on the liquidity, we have to go to a weekly. Weekly, you give us a draw, or weekly, you give us something that daily is contesting to. So, what supported that movement? Those movements we saw. We can see we are at a key level, this high, and not only that. At a point in time, at a moment, this particular candle was wicking this up. So when it's wicked, like it opened here, it first of all bought. When it bought, it started selling. So at that process, it was wicking that high. So that wick that it was doing at that high, it was wicking and it was going down. The lower time frame confirmed it. What do I say? In the sense like it closed, you see, it closed so close above, went and it was doing what? What was it doing? It wicked and it was selling. Came back up, closed, and closed above again. So this one is not our business, you get? So at a point in time, at that moment, it was wicking, it was selling first. It was selling first. That is what I want you to know. That was why that particular move held. And there's a reason why this one here did not hold. This particular one here. I will show you why this particular one here did not hold. So since it was wicking above, there was a context on the weekly that is wicking. Now, it's not bearish. You get the point? It's not bearish. But at that particular point, it should be bearish first. But it's not a bearish market. But at that particular point, you are going to be bearish because it's rejecting. There is a rejection going on the higher time frame. Now, the lower time frame now supported the rejection. You get the point? So the daily supported the rejection. So from that daily, that rejection that was going on the weekly, the daily supported it. There was a close above. Since the close above have support that rejection from the weekly, that the weekly is rejecting down, it has supported it. Because the price is not happening at that moment. That is why you did not see it. It will be a little bit confusing, but just get me here. So it supported that rejection, and then there was a 4 hour confirmation, and then the catch. Please don't forget to use your what? Don't forget to use your risk management. Where is it? The first time, the first risk could be out. Is there all this liquidity? This are point of liquidity that reversal might happen. Your first entry should be out. 2 position, then you let the rest to ride. So what are we doing? What am I saying that is going to happen here now? Let's say, for example, let's take this other one, for example. We want to sell. We don't just sell moves. So now you will be saying it that, okay, close above, right? There was a week and this. Now, if you see clearly on the daily, right? Clearly on the daily, we are already done with this move, this buying move. Let's just say we are already done with this particular bullish move, right? And now it closes below. So which indicates that we want to sell. So if it's indicating selling that we want to sell on the daily, that clearly the daily, we want to use the daily as a context. We don't have to just focus on we'll go higher a time frame. What's the weekly? Is the weekly supporting it? This other one, the weekly was supporting it. That was why. Now, if you notice on the weekly is not supporting it. You get the point? Because there is no candle like sweeping the weekly and rejecting. And there is no candle. It's just only this particular candle. So since you have caught your buy and it's showing a sell, since there is no candle like giving you a respect in direction, there is no candle giving you a respect in direction, you leave it. You are still bullish. You are not bearish at all. Because that one is just a range candle. You are still bullish because it's still this particular candle that is gallivanting for you to buy. So the sell would have been sure if there was a new candle that opened here, probably sweeping this high, then rejecting, then that sell will now be sure. But the sell is not going to be sure when it's still that particular weekly candle gallivanting. It's still bullish. You'll be looking for bullish price action. You get the point, right? So it's still bullish. So now if you see this one, at least the new candle opened and there was a rejection at first. That was why that sell had. But the price is still bullish. That is why after the context was hit on the lower time frame, it reversed. You understand? So same thing here. That is why that sell will not hold. So this is how they will be taking you guys out and you guys will not be able to spot your mistake. You know? So this is why this sell did not hold. So you shouldn't be looking for sell that week. That week is still bullish. It's telling you it's still bullish because it's still a weak candle. There is no other candle disrespecting it, like rejecting. If you see this one, at least the next weekly candle opened and was rejecting. So it supported this lower time frame context bias from the higher time frame. But this one, it's still that same particular weekly candle that was playing. So what do you expect? So it would be bullish. So instead of bearish, you are going to be bullish. Now, this one now is the daily bias. That one we are using weekly bias. If you see we closed above, okay, quite all right. And now there was a week, at least you see, there was a week. What's the next door on liquidity this high? So we already know there was a kind of a move on it. Let's check. There was a move on the lower time frame even before the sell. So this is how you think with your brain. You don't just react. You see, but you see, there was no clear intention there was no clear CRT. So we let it slide. There was no clear CRT to go bullish that moment. So we let it slide. You know? We let it slide. So this is how I do it with my higher time frame. This is how I do it with my higher time frame that supports any CRT I'm taking. So that is why the CRT, this sell will not hold. So instead, since the weekly was still gallivanting, what do you tell yourself? You tell yourself there is a fair value gap here. This week above is supporting price to come back at the moment to this fair value gap at key level, then to continue to drive price higher. Adding mean there was a close and there's another candle taking the high, and I see this week it will hold. Go and that explanation I did, go back to that explanation again and go through what I'm saying and see it over and over again. You get this CRT would have held if there was a new weekly candle rejecting from another high. So this is another type of entry that I use. This my top up rejection model. You will know more of this explanation once I go more on the rejection model. You get right? So that first one is a close above. This one is a weak above, So let's just say, for example, now we already know, since we are trading candles, we are bullish, We let the daily to close weak After the daily close, what do we now do? Even before it closes, we just go down to 4 hour and look for confirmation. We look for a close above on the 4 hour. Now you can clearly see on the 4 hour, there was no clear close above. But now, after this manipulation, clearly there was a close above here. So even before that daily ended, we could look for an entry. But that's not our issue. We want that daily to end. So if we want that daily to end, we'll wait for it to end. Where did the daily end? The daily ended around this. Yes, this was where the daily ended. The daily ended and the new one opened around this level. Yes, daily ended and the new one opened around this level. So the manipulation daily ended and the new one opened around this level. And you say there was a close above. You always see me in my TikTok video, you see I write close above. So once the candle close above, it has supported our bias. What do we then do? We go down to a 1 hour and look for our turtle soup OTX, type 1 or type 2. It depends on the one that form. You get the point, right? It depends on the one that form. And if you clearly look with your eyes, if you can clearly see with your eyes, there was a push down here before a buy up. So this push down is our first entry. You get the points, right? It's our first entry. There are cases where it will reverse like this. That one is not even, you don't have to be scared of that one. You get the point, right? It's our first entry. So this would have been our first entry. Just because of the candles are clutched to each other, that was why it did. You can see that, okay, there is a move, there is a low formed, and you mark this low. But if you clearly look at it, the main low after that close above, you understand me? The main low, the flow that formed after that close above is the low. And after it, there was a buy, and we came back to it as our entry. You don't have to be scared. Just hold it. That's just it. And this move will give us 5R. It's a big move. It's a very big move. Yes, 5R. You see, I already said it in my head. It's a very big move. It will give us 5R. Now, if you are targeting 5R, we already know that, okay, at 4R, we are taking our first TP. You see, at 4R, it did not even give us first TP. It was reversing. So it's the grace of God for you to hold. That is why I hold TP or SL. But in most cases, before any reversal like this, there is always a take profit around the 4 hour around this level before any strange reversal. But it doesn't matter. All you know that price is bullish. So all the reversal will not freak you. But after coming back, it went there. There is no, I don't break even. This is what I do. SL or TP and this. So this is how you analyze and you know a particular direction. You get the point, right? Now let's look for, we are not looking for buy, we are looking for this is another type of the model, the continuation model. Now let's see if you are sweeping a low or we are sweeping a high. Now, for instance, on this week, let me just clean this one. We already analyzed it So you see, this is how I trade. You will be if you are good, if you are smart, you'll be correct most of the time. Then if you can see on this particular week, what was going on this week? We took the high. You see, we are sweeping the high. So since we are now sweeping the high, this one now is not clear that the next week is sweeping the high. We go down to the daily and observe also, and you can observe there is a CRO clearly looked. What happened around this level? If you clearly look with your eyes, what do you think happened around this level? And how do you now enter? You get the point? So how do you now enter from the daily to 1 hour? Because you use 1 hour as your entry. How do you now enter? You see there was a low here. Form the low. You mark it out. Wait for a break of structure. After the break of structure or anything, we should enter from this low. We should enter from this low and target 4R. But this is what we call missed entries. I told you there are cases there will be a missed entry. These are cases when it happens, it occurs, you will miss entry. And it hit the target, but we missed. So these are missed entry cases. Call it the missed entry. It will happen, you will miss. That's it. Then you will move on to the next. Now, after this day, you just move on. You just hold on and wait for the next daily, the next draw on liquidity or the next thing to form and avoid rubbish. Let's go back higher. Let's go back to daily. Let's see after that day what happened. How would we have, you know? After that day, there was nothing. We know we are bearish, clearly bearish, because they are sweeping the weekly high, and we are not bullish at all in any case because we are rejecting from a weekly high and there is a close. So we know we are clearly bearish. So you get the point. So we just wait for, you see, there is no context again. So we just wait for this day to pass, this day to pass. That's all. You get the point. That's all. But if you can see, there is also entry for the weekly, but we are not taking weekly context. We are just taking within the daily context. That's why I don't want you to take weekly context. But weekly context can make you to understand what the daily is doing. You can easily know that, okay, we are sweeping this daily high. Because from a weekly context, if you go down to 4 hours, since we know that weekly context is about to open, if you go down to 4 hours, it's a 4 hour turtle soup. It's a 4 hour entry. That our entry mode on the 4 hour. That's what happened. But we are not. Um, let's see what's happening. We'll go back to the weekly and see what's happening. Let's go back to the weekly. Let's see what's happening. If you see on the weekly, we were still rejecting. We are still rejecting. So we'll be waiting for a close below on the daily. After our CRT, after we catch our move, was there any close below? No. Any close below? No. You can clearly see that there was now a close below around this level. After that close below, then you can now start looking for, context and entries to target this low. But there was nothing good again for that week. After this day, there was nothing, so you slide, you let it go. Bye. You go to other place to look for setup. You get the point, right? You go to other place to look for setup. So that's that for that. That's that for the lectures, for everything, and that's all. There was a close above around this level. We closed above. Yeah, we went too deep, with not weak. So it might be partial. There is a consolidation here. There's a weak. So here might be the next target. It's a partial move though. We just have to target it before we do anything. There might be the next target. If you even look, say, if you see, yes, supported that move. Because this one is another pattern. I don't want to carry your mind there. There's another way, but I don't want you to trade it. There is nothing going on here. It's not our model. It's not our this thing. Don't do anything. But me, I know how to do this kind of move because this candle failed to do anything. So the next candle will have to take this high before it to sell or before it to buy. You has to take this liquidity here. You to not just sell and take this because there is a rejection now. So you understand. So don't worry about it. That's all for this. Then let's go and look for other examples too on Euro USD. Let's go and look for other examples. So this is Ethereum USD and few analysis on it. Same setup, same looks and everything. So it's the same thing that we are about to do here. So about to analyze how I caught it by over the night till this morning, and it was really clean. It was clear. So this is it on Ethereum USD and on gold. I'll also do on gold. So if you clearly see, we are taking this low, and on the weekly, what are we saying on the weekly? We are rejecting off of this fair value gap. There is no clear CRT on the weekly, but we have a momentum. We are bullish on the weekly. You see, the momentum on this weekly is bullish. There's nothing bearish about it. The momentum is bullish. We would have been expecting price to sell to this place, but it decided to go bullish. And so follow what the momentum is telling us on the candles. And if you can clearly see, we closed above this level. There was a close above, also confirming the bullish momentum on the weekly. You get the point, right? Then what's the daily doing? Since we are bullish on the weekly, we are not bearish at all on the weekly because if you clearly look, we are not sweeping any high or any low that will reject from to go bearish or anyway. We do not even sweep this low to go bullish. We are just bullish. We are not sweeping any high, nothing. You understand? But we are bullish on the weekly because we are rejecting off of what? A fair value gap. So that's what is making this buy bias to even stand. And we are closing above here. So what do? We can see on the daily that, okay, this close above, we have this drawn liquidity here. You get the point, right? Read the candles correctly. And this candle failed to continue lower, failed to sweep above a high and to continue lower. So instead, it rejected and what opened. Now, there are ways to confirm that. You might be expecting, oh, let it come back to this fair value gap down here, then before it buys. Now we trade candles, so we just see what the candle is telling us at that moment and follow it. Just as simple as that. At this moment, it's telling us it's bullish. So if we go down to a 4 hour or a 8 hour, you'll see a model, but since I don't have the 8 hour chart on, we'll go down to a 4 hour because from daily to 4 hour, if you go down to a 4 hour, what do you observe on the 4 hour? You observe that okay, we have this, right? So you observe that we have this low. Where is it? You observe that we have this low and we have this high. Minding you, the weekly is bullish and the daily also is giving us bullish momentum. You get the point, right? You can't go bearish at this point because the weekly is already bullish. So you mark the low, you mark the high of the candle range. You get the point. So once you mark the low, you wait for a push and you wait for this candle to close after it sweeps. So after the closing, then what do you now do? Straight to our normal routine, our normal model. We go down to 1 hour and look for a close above. And on the 1 hour, what can we find? We can see that after the turtle soup, we closed above at this level. You get the point, right? After the turtle soup, we closed above at this level. So, and I believed the candle opened around this level. For our days, and 8 p.m. So it closed and opened around 8 p.m. So let's go back to here and see where 8 p.m. lies. So this was it. Yeah, it was around this level it closed. You get the point, right? So immediately after the closing, what do you then do? This is what I do. I go down to after the closing and I confirm my close above on the 1 hour. I go down to the lower time frame to look for turtle soup. You can clearly see there's a low here. After this low, there was a push up. You can mark this. So this is like a candle turtle soup. It's still the same thing. Sometimes it might decide to push up very well, sometimes it might decide not to. You can go higher in time frame to clean it. And you see that this candle came down, formed the low, pushed back up a bit. That pushback that I pushed back up a bit already giving you a clue that yes, this is where the turtle soup is. Then your entry will be here to trigger you and to continue in that direction. You get the point, right? So if you're entering this move, you enter off of this place and target a good 5 hour. I think this move will give you a good 5 hour. So these are risk management. Then risk management, to take your first TP out around this liquidity point or at a good 4 hour, take your first TP, two of your positions to be out at this point, then you just allow the rest to run to take profit. You get the point, right? So you run to take profit and don't mind you, our move is this overall daily target. So we had a case of death when we have the low, break of structure, and then price came back. So that's the case of death. So that's it. Just as simple as it is the same entry pattern. It happens with either candles. You see, sometimes price will not, this particular price that left this candle this low here, sometimes it will pull back up and the next candle will come and take it. But it less likely happen. Sometimes it just gives you a structure and it comes back to take it. So that is how it works. So you know how to maneuver them. And let's go back to gold. And you see it's still bullish. Let's go back to gold and I'll analyze gold. I told you how I caught this buy that's currently reversing on gold. Let's go to gold and see the buy. You can see the buy, right? Yeah. So I will just go back to weekly. Then I'll have to clean my chart. I think so, yeah. So I have to clean everything that happened under here. I'm coming. That's all. So as for gold, you can see that clearly on the weekly, we are having a weekly CRT about to occur. A weekly CRT about to occur. And we are clearly bullish. So since we are clearly bullish on gold, you can see that we are clearly bullish. We are not sweeping any. We are just rejecting for a while, but we are clearly bullish. So at that point that we were clearly bullish, we go down to the daily. What can we observe on the daily? We can observe that there is a sweep above here. So this is how you will not fall for their trick. There's a sweep above here and there's a low there your target. Normally you think it's a CRT that is about to occur, but you are wrong. Clearly, it's not a CRT because what's the weekly doing? The weekly is still bullish. So I told you in that previous Ethereum USD video, you can see that if you decide to sell from that previous Ethereum move, that other move when the weekly was bullish, if you decide to sell from there, it will fuck you up. So if you would have sold from there, it would have messed you up real bad. You get the point, right? So that's what's happening here. You don't sell this type. You don't just sell from that daily context when the weekly is not supporting it. So this is how you catch moves that people are confused of. How did you catch the buy when I'm supposed to? But it's the CRT, there's a close. The candle is closing, but it's still taking me out. I entered this move, but it's taking me out. It's because of the daily, the weekly, the higher time frame bias before that move. You get. So if we want to trade weekly, we'll look at the monthly. Then we can trade on weekly context. Because if you don't look at the monthly, you just don't trade on a context on weekly and think it's old. No, the higher time frame would predict predict where that particular move is going to head to. If you understand that predicament, so like this, it so since we were some people will be expecting okay to sell, but at that point, I'm not expecting a sell. I'm expecting a buy. I might be seeing a sweep above, but do you know what I'm seeing? I'm seeing here as a drawn liquidity. Since there is no sweep below, then what price is, and there is a close above here, then what price is telling me that? Price is telling me there's context going on the lower time frame, not on the daily. And if we clearly go down to, you can see it, right? So if we go down to the 4 hour, you can clearly see that on the 8 hour, there is a CRT going on here. You know, this was the low that was taken on the 8 hour, and this is the high that we are seeking after. If you go down to your MetaTrader 5, you can check this particular move. You'll see it on the 8 hour, and there was a CRT. So the 8 hour on my trading view is not coming up because I've not subscribed to it this month yet. I really don't need it for now. So after that, then we'll go from the 8 hour context, we scale down to 2 hour to look for a close above. Where's the close above? The close above happened after the manipulation. I always emphasize on close above after the manipulation. So after the manipulation, the next candle that closed above this candle have confirmed that we are bullish. You get the point? Then after that, because the close already happened, the total sub candle would close. I think it closed around this point, yeah, and the new one opened for distribution. Then we scale down to a lower time frame to 1 hour, 30 minutes to look for entry. And you can observe what did we have here. If you can clearly look, let me go back to the 1 hour and see. I think the 1 hour will give us something. Yeah, so if you can clearly look, we had this low, then the push up. After this low, we had the push up. Then this low is now at our entry. You get right? So this low is now our entry after the push up. I'll make it tick. So I'll place my entry at this level. Just place your limit and target what? A good 4 hour. That's it. So that's the setup I caught on gold. But I think the 5 hour is not bad on this setup. 5 hour is still definitely going to hit. Okay? 5 hour is still definitely going to hit. But it's good to target 4 hour. You know? I always target 4 hour for some kind of moves like this that's kind of, very, very skeptical. So that's it. What entry happened here? Let me go back to 30 minutes so that you can confirm. 15 minutes, or let me go back to 30 minutes. So what entry pattern happened here? If you can guess, before I mark it, you can just pause it and guess. It's just the type 1 type of entry. Still like the type 2 but in a sense, not the harsh one. There was no break of structure. Took this low, price went back up again and came back and took this low again. But this is the type of type 2 entry that is not harsh. So the ones that are harsh will definitely take your stop loss around this level. Once they take it, just put your entry back at this place. But the ones that are not harsh, just enter a little bit and it comes back to enter, then there's no problem with these types. But it's still the same thing. That's it. So this is just a model. There's nothing much to know, nothing much to learn. Firstly, your weekly direction. If we go down to Euro USD, um, the same thing. How I caught this buy on Euro USD, how I analyze the buy. You can see the close above, right? Let's delete everything and go higher in time frame and see what we would have done, how we would have used this. Let me go to daily. I think the movement okay. On the daily, you can see we are clearly bullish on the daily. So since we are bullish on the daily, we are trading inside that bullish candle on the daily. We already know that okay, we are going to buy. So we had a clear close above on the 4 hour. This is our drawn liquidity on the 4 hour. So if you have a drawn liquidity on the 4 hour, where do you look for your CRT? You look for your CRT on the 1 hour or on the 2 hour. But I would prefer you look for your CRT on the 1 hour. If we go down to 1 hour, okay, you can clearly see that we had a very good CRT. This was it. First, we had this candle, and second, we have this candle high. And notice I always target the context. I don't need anything. I just need the context. You get me, right? I don't need the context. So what happened at this point, at this moment in time? This is what happened at this moment in time. Immediately after the close, we opened by 5 p.m. 5 p.m. What do we do? From 1 hour, you go down to 15 minutes to look for your close above. It's as simple as this. So immediately after the turtle soup, there was a close above around this level. So after the close above, what do you then now do? Go down to 5 minutes to look for our entry. And what was it? We had this low. Immediately after the low, there was a push up. So what do? You mark the low. Sorry, let me mark the low clearly. You mark the low and you set your limit there. And you target a good 5 hour. This setup is going to give you a clean 5 hour. 5 hour. And you will be safe at this moment. You can decide to target a 4 hour, but I know a 5 hour will save you. No matter how bad, it won't take you out. Just have a good broker that have a good spread. You get the point, right? And this is the setup. This is the model. It's as clean as this. This is how you utilize it. First TP at this level, first TP should be a 4 hour at this level. You take two of your positions out, then the rest should ride on to the top. You get the point, right? And this is how you avoid any other rubbish. But now let's just see what happened in the future. What we would have utilized in the future since it was still bullish and it was gallivanting. What happened throughout all this move? If you go down to the 2 hour, you can clearly see that